Hi, very good morning, and thank you so much for taking out the time. Last week we were talking, and your views with respect to all the metals has been helping all the physical market traders and hedgers. So the geopolitical situation continues to be there as a critical item, and the war conditions and everything is around. So now, what is your view going forward? What do you expect out of it? Your expert views are required.
Yeah, hi, Swapnil. I think current scenario of about 2.5 weeks of time, the US, Israel, and Iran, and the other side, Afghanistan and Pakistan, and the ongoing Russia-Ukraine war, all put together, a kind of a I won't call it third world war, but kind of a situation that it can go to any side of the scenario in the world. And we are just wondering what if India also gets involved and China also gets involved. So the cause of concern is that geopolitical stress across the regions, and it should not get parasitic impact on the other countries, and we have a problem going forward. Of course, globally, we are seeing the energy shortages issue, and I think that is the major threshold of discussion going on around. And although casualties across the countries are very high, but the talk of the discussion is all about energy shortages. And with this, we have seen good amount of risk-off situations globally across financial products, and that is mainly because of the US dollar has become a safe haven asset, and that is the only underlying which is moving up. And because the dollar index is higher, we are seeing gold, silver is also not able to perform. And forget about base metals, the most risk of kind of situations we have seen. Most of the metal prices are correcting from the down from the higher side. But of course, in this kind of situations, typically you will economics point of view, if you see what is the general reaction is that when there is a war kind of conditions, the demand growth will be slowed down, the consumption of the metals will be lesser, and therefore the metal prices should be coming off from the highs, or if they need to come down. That is a general scenario. But by and large, if you see in last 3 weeks of the war kind of situations which is going on, Swapnil, we have seen price correction in metals, but we are not seeing a huge decline or change in trend of metals.
Yeah.
Take an example of aluminium. We will talk in detail about aluminium and other metals in detail. But if you see, this war condition has actually supported aluminium prices to move up because of supply tightness. If you look at copper, because of the higher dollar, treasury yield strong, equity market declining, copper prices have come off, but not to the level that is probably expected in the street. If you look at zinc, if you look at lead, if you look at tin or nickel, all of them have shown volatility, but they have not shown a clear direction whether they should be clearly risk off trend that everything should fall down. That is not happened. So, how should one look at the macro stress because of geopolitics? One is that I would say volatility is something that we will continue to see on metals. No respite here. So if you are a manufacturer and buying raw material domestically or importing it, you have to do back-to-back hedging or back-to-back purchase or sales. And our suggestion would be not to keep the market positions open very drastically, because the average 15-day volatility of metals per se, if you look at it, it is huge and is much higher than the historical average 15-day volatility of metals. So that means we are seeing a situations where the volatility has been maintained and it can be there for quite a long period of time. Yes.
Okay. So,
Yeah.
you spoke about aluminum also during your discussions, and that is the hot commodity right now. Considering the escalations which are there in Middle East and the smelters curtailment, do you think that aluminum prices can go up to 4,000 metric ton kind of levels?
I think looking at a number of $4,000 is a tail end of risk, and not a base case scenario. Something more unforeseen happens, then aluminum going to 4,000 is something can be perceived. But let us look at what's going on aluminum and why has it been rising.
Yeah.
For all our viewers in the present who are listening to us here, we are just understand the aluminum dynamics and what is the matter. Global supply for aluminum is all about. Swapnil, am I audible? Swapnil, am I audible?
Lost you for a minute actually. We
Oh,
couldn't
I'm so
get you
sorry. I don't know
clearly.
why the network is bit.
It will be great if
Am I audible to you now?
now you're audible to us. It will be great if we discuss about aluminium once again.
Yeah, sure. I mean, I was a little dicey whether the audience are able to listen to us or not. So let me put this across on aluminum. You asked me a question, should we look at aluminum prices going to $4,000? So it's a very tail end risk of scenario. It is not a base case scenario. And this year in 2026, almost 2.5 months passed, and we have seen a good amount of jump in aluminum prices, close to $3,500 per ton from the levels of $3,000. So we need to understand why aluminum is so prone to this war conditions and why this metal is only moving up, whereas the other metals are not moving up. So if you look at decode the aluminum dynamics, globally it is about 73.5 to 74 million tons of supply. Okay, and out of which around 45 million tons comes from China. All right, which is about 60 plus percentage from China.
Yeah.
Some years ago, China brought a policy that they cannot increase the production beyond 60% of the global supply, or in other way, if we say they cannot exceed 45 million tons. So that means last 1 or 2 years, China has been facing its cap of its productions about 45. Okay, out of 74, 45 is capped at China. So that means aluminum is already in a deficit condition. Now, if we remove China and look at the rest of the world production number vis-a-vis Iran, which contributes about 6% of the world's. Okay.
Okay.
So now this geopolitical war kind of situation going on. Now, excluding China, if the supply from Middle East or Iran through the Strait of Hormuz for exports is kind of disturbed, then definitely aluminum prices should go up. Now, another interesting statistics here is that, Swapnil, of Iran's production, 20 to 22% of supply goes to Europe, and another 20 to 22% of supply goes to USA markets. Okay. So basically, with this Iran war situation, now western part of the world is not getting enough supply of aluminum to their country. Okay. So besides that, if you look at aluminum in the US, as per the Section 232, US had already imposed a tariff on the aluminum and steel last year. All right. So along with that, now Iran is not able to export to the aluminum to the US. So there is already a tightness in the America. Now further supply from Iran to the US may be difficult. That means you are having a very expensive price to buy aluminum in the US. This number we can actually understand by seeing the Midwest premium of aluminum in the US, which is high. So if this supply tightness continues to be there for another 1 or 2 months, let's say, then aluminum prices going to 3,800, 4,000 level is definitely possible. As I mentioned, it is a tail end risk. Tail end risk. The geopolitically, if there is no discussion happens or no clarity takes place in terms of this war, if there is no truce happening, then definitely aluminum could go anywhere. Otherwise, we should see a base case of aluminum hovering around $3,200 to $3,700 in the near term.
Oh, okay. Great.
Am I
So,
audible?
yeah, you are very much. Thank you so much. It was very detailed and insightful thing. So when we talk about copper, obviously geopolitical things are there, but what are other key factors which is driving copper? And what is that list of few things which hedger or traders need to keep on top of mind while hedging and doing things?
Okay. Uh, Copper is more prone to the macro
Yeah,
factors besides its fundamentals. That everyone understands this, which also means that it is more volatile than any other metals per se. So we have seen copper prices going to $13,500. It all of a sudden coming down to $12,650, $700 yesterday. And while we are talking, currently copper is around $12,900. So by virtue of volatility of copper in nature, copper is volatile. And as I said, macro factors plays a role. Institutions participations or investors participation also plays an important role for determining the trend of copper besides the fundamentals. Okay, and as far as fundamentals are concerned, we have a tight situations for supply of raw material and refined copper. The supply tightness is always there. However, because of this war kind of situations, copper is not able to move up. And interestingly, if we look at the price of copper performance for last 2.5 months, it's about 10 weeks now. Copper has been trading in a band, in a very thin band of $1,000. Okay, so when a commodity moves in a sideways trend, it becomes very difficult to make a prediction or very difficult to make a judgment that where should I direct my view? Should I
yeah,
buy raw material and keep and hold in my inventory, or
yeah,
should I defer my purchases? Or if I have my material, should I sell it off? Because this kind of customers that when we are dealing today, we are actually experiencing the reality that someone who wants to buy, he is not able to be aggressive, or he wants to be aggressive, but looking at the price behavior, he is not. So my experience as far as copper is concerned, what I'm noticing here is that if you are seeing a range of $1,000 on a price of $12,000, means a decent price movement and slow volatility as far as long-term trend is concerned. Or if you see last 8 months, the trend was positive and copper had gone to historical high of $14,500 types. And now that we are seeing a sideways movement, we are not digesting and why copper is moving only in $1,000 performance. But in a
yeah,
way, if you look at from the producer or consumer point of view, it is also stable commodity. Now you play safe in the market. Within $1,000, you buy the lows or sell the highs, buy the raw material at lower levels, try to manage your risk through financial hedging using MCX or LME or COMEX, and you try to manage that. But then the reality is that what I can sense that the metal fraternity is not happy with so slow movement of price in copper is concerned, because that's not the nature of copper. So which also means, Swapnil, is that very soon it will come out of this range. Either it will go up or come down. But to give our thought process here, going by the broader perspective of copper, I think the copper should give a breakout onto the higher side. That is the typical fundamental should support. But in the near term, because of these geopolitical tensions, we have to be a little careful. And below $12,500 may be a sudden squeeze of uh,
Mhm. We missed your last line on the level of the coppers. I know you're traveling and a bit occupied, but if I can just take your a moment again on having a level of the copper, it would be great.
happens or profit booking or price correction may happen towards $12,000. So my subjecting, be it for consumptions or for whatever. Hello.
Yeah, there's a bit
Hello.
issue. Um, yeah, yeah, we can hear you in between. Uh, so if
Yeah,
you're
yeah.
okay,
So I
continue.
think so. Please, what I may suggest is that for this session we quickly date aluminum and copper only.
Yeah,
And I think we will adjourn the program here, and we'll take it up to the another session for other matters.
super.
So let the
I
audience
agree to
listen
you.
to us in
Thank you.
detail about it.
Yeah, thank you. Thank you so
Thank
much.
you, Discipline. We'll connect back. Yeah. Thank you.
Yeah.